Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Chow Holdings International Limited annual report. Chow Holdings International Limited offers a diverse range of businesses and services. At the core of their operations are jewelry manufacturing and retailing, with a presence in mainland China, Hong Kong, Macau, and Taiwan. The company operates through four main segments: retail of jewelry and watches, wholesale of precious metals, trading of laboratory-grown diamond and gemstones, and other businesses. In addition to its core jewelry business, the company also engages in various other activities. These include producing and selling jewelry products, distributing watches, and operating retail stores. The company trades in precious metals for wholesale customers and is involved in the sale of corporate gift products. Furthermore, Chow Holdings International Limited provides securities broking services, conducts gemological research and authentication, and offers marketing and property nominee services. The company also invests in properties and engages in diamond polishing and trading activities. To cater to a wider customer base, Chow Holdings International Limited sells its products online. With a rich history dating back to 1934, the company has established itself as a prominent player in the industry, with operations based in Kowloon, Hong Kong. Chow Holdings International Limited maintains a market capitalization of $9 billion, broadly in line with the industry peer group. Chow Holdings International Limited trades at a lower price-to-earnings ratio of 5 times and a lower price-to-book ratio of 0.6 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has continued buybacks despite weak revenue growth, raising questions about capital allocation priorities. The company have a dividend yield of 7.79%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in the company's financial performance can be identified from various segments. On the growth side, the wholesale of precious metals segment saw a significant increase of 70% due to high demand for gold and platinum products. The trading of laboratory-grown diamond and gemstones also experienced growth through e-commerce platforms and online stores. Online sales in key markets such as Hong Kong, Taiwan, and China's mainland showed substantial increases. In addition, the company's jewelry sales benefited from strong demand for certain signature collections like cultural blessings and essence, as well as gemset gold categories including YUYU and emphasis. The growth in diamond collection, Infinity Love Diamond, also contributed to revenue expansion. Furthermore, the upward trend of gold prices lifted average selling prices. On the other hand, the decline in revenue was mainly driven by a decrease in other businesses' revenue by 39.1%. Securities trading segment revenue and other revenue also saw declines. The wholesale segment experienced a drop in revenue due to lower sales of calculated price gold bars and ingots. Non-gemset jewelry products sales declined significantly, while Chinese mainland's market faced challenges with lower foot traffic and cautious consumer sentiment. The company's financial performance has shown significant improvement in recent times. A notable increase of 115% in net income is a clear indication of the company's growing profitability. This upward trend can be attributed to several factors that have contributed to improved profit margins. One key factor behind this growth is the enhancement of gross profit margin by 4.3 percentage points, reaching 32.6%. This increase has been driven by various initiatives aimed at optimizing costs and improving operational efficiency. The company's decision to optimize its retail network through disciplined strategies has led to better cost management. Additionally, the adoption of AI-enabled tools has streamlined operations, further contributing to improved profitability. The introduction of fixed-price products has also played a crucial role in boosting profit margins. By offering these products at fixed prices, the company has been able to maintain a stable revenue stream while minimizing the impact of price fluctuations on its bottom line. Overall, these strategic decisions have collectively contributed to the significant increase in net income and improved profit margins, positioning the company for continued growth and success. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data shows that the company has consistently produced positive operating cash flows over the past year and into 2025. According to the provided summary, the company's operating cash flow increased by $191,028 from 2024 to 2025, reaching a total of $1,234,219 in 2025. This increase is evident across various pages of the report, including page 5, where the operating cash flow for 2025 is compared to that of 2024. Furthermore, segment results on page 10 reveal an operating cash flow of $1,092,403, which also contributes to the overall positive trend. The data from page 16 and page 17 further confirms this improvement, with a significant increase in operating cash flow in 2025 compared to 2024. Overall, these findings suggest that the company is successfully generating positive operating cash flows, indicating a strong financial position and ability to sustain its operations. The company's debt level has undergone significant changes in recent years. The total debt has increased substantially from $3,382,992 to $8,610, indicating a substantial rise in the company's liabilities. This increase is largely driven by the growth in bullion loans, which have risen from $3,382,992 to $5,657,607. While interest-bearing bank borrowings have also increased, the rise is not as pronounced as that of total debt and bullion loans. The interest expenses on these loans have also seen a significant increase, with fixed rates rising from 18% to 33%. This indicates that the company is now paying higher interest costs on its debts, which could impact its profitability. Overall, the company's debt level and interest expenses have changed significantly in recent years, indicating a shift towards more substantial borrowing and higher interest costs. The company's performance varied across different segments and regions. On the positive side, the retail of jewelry and watches segment, wholesale of precious metals segment, trading of laboratory-grown diamond and gemstones segment, and other businesses segment all performed well. Additionally, the retail wholesale and securities trading and futures broking segments also showed growth. In terms of regional performance, China's mainland region saw a 2% revenue growth, with a significant increase in segment results at 167%. Hong Kong and Macau experienced an 8% revenue growth, with a notable improvement in segment results at 111%. Taiwan recorded the highest growth rate among all regions, with a 37% revenue growth and a 73% increase in segment results. On the other hand, some segments and regions underperformed. Discontinued operations were a significant drag on the company's performance, while bullion loans designated as at fair value through profit or loss resulted in a net loss of $1,687,769. Derivative financial instruments also incurred a net loss on disposal of $16,220. Furthermore, securities and futures broking and other continuing businesses in Hong Kong experienced losses of $33,769 and $-59,797 respectively. Management's outlook on the company's strategy is one of transformation and focus. The decision to cease operations in securities and futures broking marks a significant shift in the company's direction, allowing it to concentrate on more profitable areas. This strategic move demonstrates management's commitment to optimizing resources and allocating them towards higher growth opportunities. The investment in HKEX shares is another key aspect of the company's strategy, representing 6% of total assets. This investment is deemed strategic, indicating that management sees value in this particular asset class and believes it will contribute positively to the company's overall performance. The strong recurring cash flow generated from the retailing business further underscores the company's financial stability. Management's emphasis on maintaining a solid cash position highlights their focus on prudence and financial discipline. This approach enables the company to navigate market fluctuations with confidence, positioning itself for future growth and opportunities. Overall, management's strategy is centered around strategic investments, operational efficiency, and financial prudence, setting the stage for long-term success. The company's financial history reveals a commitment to rewarding its shareholders through dividend payments. As per the provided information, there are 2 instances where this commitment is explicitly stated. Firstly, on page 1 of the document, it is mentioned that the company has paid dividends. This statement sets the tone for the company's approach towards shareholder value creation. Furthermore, on page 14, under the dividend and share buyback summary, it is confirmed that dividends paid. Yes, this confirmation reinforces the initial statement, leaving no doubt about the company's history of paying dividends to its shareholders. There are valid concerns regarding inventory buildup or supply chain disruption. The data for other businesses in the 2025 column is incomplete, which may indicate a potential issue with inventory management or supply chain efficiency. The decrease in cost of sales does not directly relate to these concerns, but rather suggests other factors at play. Furthermore, lower foot traffic in shopping malls in China and the unaffordability of gold for many consumers are contributing to decreased sales volume, which could exacerbate any existing issues with inventory buildup or supply chain disruption. These challenges may have a significant impact on businesses, particularly if they are unable to adapt quickly to changing market conditions. That concludes the financial summary for Chow Holdings International Limited. Feel free to comment below, and I will be happy to answer them when possible.